Well, hello, everybody. My name is Charles Moon. I am not Scott Bauer. I am sitting in for the great Scott Bauer. And today I am co host or guest hosting Market Minds. And we're going to do a nice little trading indicator lesson. But before we get started, I want to see everybody in the chat say hi. Love to see all the people in here. Uh, I want to make sure that you folks have subscribed to our channel so that you are alerted every time we go live with one of these Market Mind episodes. And as well, you are doing us a favor by smashing that like button. But on top of liking, you also have to be active in the chat, ladies and gentlemen. So just check in, say hi, let me know where you're in from, how your trading day is going, things like that. And as well, we'll do a Q&A at the end. This is just going to be a follow-up lesson. My AI traders yesterday know exactly what I'm talking about because I had this lesson yesterday, and it was a great lesson, in my opinion. And these are really good indicators, especially the linear regression channel, which we'll talk about in just a bit. Hello to Robert, Kevin, Eric, Jake, Gus, Dave. I don't want to try to say that username, but XOX, how's it going? David, Craig, ooh, LinkedIn user. It's been too long. How's it going? Mike calling in from Arizona. How's it going? All right, folks. So hopefully everybody can see us. But yeah, I do greatly appreciate that. Market conditions a little off, but we are positive. I, it's been a weird day, folks. Tesla had that weird spike up because the ever so ongoing and awkward soap opera. Trump tweeted that he likes Tesla. So Tesla spiked out of nowhere to highs of the day, been rolling back. We'll see if it gets going back up here. Dow's up 43, Nasdaq's up 47, S&P up 16. Russell, a bit of a laggard. VIX is still up today, so quite the day leading into the weekly expiry um, tomorrow. And again, much love, everybody. Sandip, what's up? Gilbert, how's it going? Stanley, how's it going? Prospectives. Let's go. Okay, so let's get into our first lesson, and we're going to be talking about the Bollinger Band. Now, for some of you that are in my programs, there's a lot of familiarity. For some of you that have learned technical lessons, oh, sorry, Michael, I need to do this, right? I need to share my screen. I promise I'll be with you. I'll do this in 1 second. Let's do this. Let's do okay. Everybody see my screen now? Let's see if it shows up here. Yes. So for those that initially learn, you learn about an indicator known as the Bollinger Band. Now, how many of you are familiar with the B bands? Right? Anybody familiar with the B bands? Yeah. You may have heard of a gentleman named John Carter. He has the TTM squeeze or TTM theory, and a lot of this is centralized around the Bollinger Bands. Now, if you're in Mike Shore's room or in my Momentum Stocks room or AI room, there's something that you're going to find very familiar, and that's the two standard deviation move. Now, in Opval, Scott talks about a lot in terms of pricing in relation to the standard deviations, but this is a great indicator that highly showcases where these standard deviations are. Now, these are two standard deviation bands above and below, and as you can see, it's a derivative of the moving average. That moving average is the 20 period simple moving average. Much love, Gary. Now, these are what's known as great reversal or pivot points. There's different variations in relation to how you should trade these, right? I'll give a prime example, but these two standard deviations should be known as reversal points or pivot points. As it says, it usually gets to these bands, they're usually overbought, oversold. A lot of the times they'll coincide with another indicator known as the RSI to help confirm that. But the middle point and the midpoint of these bands or these volatility envelopes is always going to be the 20 simple moving average. So let's go to the next slide. Again, helps you identify sharp short-term price movements and potential exit and entry points. Now, this is one of the pure benefits is that when you're taking a trade, you have the realization of where your upside potential is and your downside potential is. And these could be levels that you could target to actively manage your position. Maybe we buy on the breach and hold of the 20 SMA in anticipation it's going to go to the upper band. And, we could have that as structure within our trading program or our trading plans. And that's really important. A lot of people will take trades, but not enough structure. They're not sure when they should take profits. They don't know how long they should hold. Sometimes they hold too long, sometimes they hold too short. This will help you maybe not fully alleviate those concerns, but certainly gives you a little bit more texture and context to trade under. Now, the Bollinger Band again consists of a middle band, which is the moving average. That's kind of what would be the mean, and the upper and lower band, which would be the two standard deviations, plus or minus. Now, um, the general principle is that by comparing a stock's position relative to the bands, you could really kind of determine if there's fair value or overvalue. That's the key. That's the key. Relatively low or relatively high. And the width of the band is an indicator of the stock's volatility. So a lot of the times when the bands start to tighten, it means that volatility is really small, but a lot of the times people will utilize this indicator in anticipation that a break or a coiling breakout is about to take place. And obviously, if the bands are really wide, that means the stock's been trading in high volatility. And as we see it tighten, we know that the volatility is starting to die out. And then, of course, we could have lesser expected price movements. Again, most bands typically use the 20 period moving average. That would be the very common and the most popular structure. The period in relation could be dependent on charts. Now, for me, I use the Bollinger Band structure on a daily chart where each candlestick represents one full trading day. But, in terms of how I may be using other indicators such as the volume weighted average price, again, there are other indicators that will mirror something very similar to the Bollinger Band. I'll use that on a 3 minute time frame. And you could see kind of Tesla here as a prime example, um, peaked out and traded outside that Bollinger Band. But once they got pulled right back in, it became an immediate reversal sign. And these Bollinger Bands, again, usually we will see stocks look to exceed. And when they exceed, the high probability in terms of math, well, math dictates at a pretty extreme rate. I pretty much at 100% guarantee that stock will not remain outside of that two standard deviation. They will get immediately pulled back in. And it doesn't necessarily signal a long term reversal, but certainly can lead to the idea of a reversal. You could see here this stock had traded well outside that Bollinger Band, but once they got pulled in and rejected at that band, it led to a nice sharp drop. And that was similar in this instance as well. And so we could see these Bollinger Bands to be utilized and worked as a precursor or a idea of when stocks may look to rebound. You could see on the lows here, Tesla had bounced off their band. They rejected, but you could see that the band started opening up right here, and then they started making that move. They just pulled back and traded outside of that Bollinger Band, and sure enough, a few days later, they had snapped back up. So ideally, the Bollinger Bands will give you a lot of texture and kind of give you an understanding of overvaluation in the short term, the potential pivot. Now, can a stock trade outside the band and continue? Without a shadow of a doubt. I don't want us to think that can't be the case. But ultimately, the idea here is that when it touches those bands or exceed those bands, it just means that the likelihood of a pivot also is going to be in the picture. Now, again, just because it touches the band, it doesn't necessarily mean that you should sell. When it touches the lower band, it doesn't necessarily mean you should buy. But again, it gives you a lot more texture and understanding. And if we do reverse off of those levels, then you know exactly what is taking place, and you could either actively look to trade or actively look to manage your position. Hopefully that makes sense, everybody. Okay. Now we're going to bring out our next indicator, which is known as the linear regression channel, one of my absolute favorites right now. Now, I can't take credit for discovering this indicator by any means. Respectfully, this is actually taught to me by an individual here known as Howard Greenberg, our great crypto coach. He introduced me to this indicator because this was the primary indicator he was using when I first was introduced to him to trade crypto. And it had a very effective rate of success if you analyze and interpret the information properly. And because of that information, and really just how well Howard had traded initially, it really intrigued me. And this is where I started applying this into equities. Now, I primarily use this as a swing trading thesis, and I'll bring that up in just a second, but it offers up a ton of clarity in terms of projectable movement, when stocks could really start getting bullish or bearish, and gives me a great indication based on the linear regression structure. And that's really important. Let's talk about structure here. The linear regression channel. Now, personally, I use the linear regression channel 100, which is taking back the days of 100 days back. Similar to the 200-day moving average, large institutions often looked at long-term linear regression channels. Now, the beauty of these LRCs, which is short for linear regression channel, is that they'll also show you the key significance of trend. They'll be well defined in an uptrend, downtrend based on the slope of that LRC. And it gives more objective potential buy and sell signals based on price volatility. So it consists of three parts. That's why there's three lines. Now, a linear regression line, it's a straight line that best fits the price between a starting price point and an ending price point. A best fit means that a line is constructed where there is the least amount of space between the price points and the actual linear regression line. So the linear regression line is mainly used to determine trended direction. These are also something that is viewed in relation to being two standard deviation moves from what's known as the mean or the midpoint of this trend. Now, traders will usually view this linear regression line as the fair value price for the future stock or Forex currency pair. Now, when prices deviate above or below, traders may expect prices to revert back towards that linear regression line or what's known as the mean. And as a consequence, when prices are below that LRC mean, that could be viewed by some traders as a good time to buy for the long term. And the short term traders may actually view that as a signal to short. And again, this is also a matter of interpretation. Of course, other technical indicators will be used to confirm the exact buy and sell signal timing. But let me break this down a little bit further. And before I break this down, I want us to understand the context of this. The context of this is once again providing more information and more texture or more structure for a trader to trade under. It's not to provide analysis or paralysis by analysis, but to really free your mind in how far a stock could actually move in a dedicated time frame and for you to capitalize on that. It also will give you a good indication of strength within the stock or weakness within the stock, which could also help you manage your position. So the upper channel line, that's a line that runs parallel to the linear regression mean and is usually one or two standard deviations above that mean. And that would be the same with the lower channel line. Now, again, they contain between themselves either 68% of all price if one standard deviation is used, or 95% of all price if two standard deviations are used. So when prices start breaking outside the channels, well, buy or sell opportunities are presented, or the prior trend could be ending. And so again, effectively, if we see that a stock's been trending strong, starts breaking down below the lower linear regression line, it could really give a signal, a strong signal that the trend is now really the long term trend is now ending and that we could actually see more fallout. So, a prime example, if I bring this chart up here, I also want us to know that this linear regression mean, and I'm going to highlight this white line, that's the midpoint. That could also act as a extremely important support and resistance level, but it's also a bit of a gauge, right? It's a sentiment gauge. If we go from below to above, well, that could really open up the skies. Here's a prime example. If we look at Tesla, look at the two times that it rejected and then all of a sudden it gapped up and held that level as support. Look at the explosive breakout that occurred. When it came back down to revisit that level, look at how strong that drop was that came in shortly after. And then when there's failure to hold above that level, that also leads to a fast breakdown. And in terms of trading the extremes, I'm going to pull up Palantir, PLTR. So Palantir is going to give you a really good glimpse if I condense this chart. Now, if you want to take a look, the linear regression channel at the top is going to be highlighted red, and the linear regression channel at the bottom is going to be highlighted green. So if we take a look very closely here, I'm going to expand this chart really quick so I can maximize the screen. But if I just condense it just a little bit, you could see that the linear regression channel is quite bullish, right? Look at the slope that this channel is on. So it's saying Palantir right now is on a very strong uptrend. Now, as you could see, there's two things that really stand out to me right here and right here. Those were the pivot points, which is what we have to kind of understand when a stock on the daily chart approaches these levels, that they could be very significant pivot points. And for me, you could see just the depth of the move here in Palantir and how strong it's been actively staying above that linear regression mean. And if I highlight it prior to that, again, that was a heavy duty suppression point that knocked the stock price back up. But since it's been above, it's been marching and working higher. Now, this gives you a lot of texture in relation as well. And I'm going to minimize this. I love this on the hourly time frame. Ladies and gentlemen, got down to the bottom of the channel. What happened there? Oh, what a reversal. Palantir got back above and held that mean right here. What happened? Oh, a pop to the top of the channel. So if we understand that a stock, if it stays above 130, is projected to move to 140, and if I told you, well, this is a low risk, high reward scenario that you could make 10 points off if you only risk $1.50. How does that sound to you? And if the answer is it sounds good, then you should have a lot of interest in terms of this particular indicator. And as well, the outside, parameters in relation to other indicators could certainly come into the picture, but ultimately, when we have the ability of making these significant price movements up or down, it is going to be important. Now, just like the Bollinger Band, the width between the top and bottom of the channel will tell you what type of volatility the stock has had over the last few weeks. Let's go back to Tesla. Suffice to say, Tesla's been a little nutty over the last 2 weeks. Well, I pointed this out yesterday. Ladies and gentlemen, look at how wide their pricing channel is. That pricing channel right now is currently 100 points wide. So think about that. This is now 100-point channel. Now, anybody recognize what Tesla did right here? Did anybody recognize that's supposed to be the pivot point? Can everybody see that right there? This was important. This was the meltdown day, right? And I'm called the meltdown day because Elon was on Twitter going nuts. And because Elon was going nuts, well, the stock ended up dropping 14% that day, over 50, 60 points. But yet, somehow, it just picked itself up. And now, ladies and gentlemen, even though our linear regression channel is sloping down, what do you see taking place right here at the midpoint? This is important. I want you to think of this, these two zones, okay? Let me just type this out here. Let me make the font a little bit small. Hopefully everybody can read this. I'll do this one. This is bigger. Bull zone, bear zone. Whoops. Now, again, in our previous slide, and by the way, before I move on, I need to make sure I do this as well. Folks, in honor of Jeff Laker, our word of the day. Our word of the day is Thor. So, folks, if you want to be entered into our Wheel of Names drawing that we do at the end of the show, please type the word Thor into the chat. By the way, what a beautiful puppy. And as you know, the Lake Show, he loves Thor. Just kind of keep that in mind. So, Thor. I thought it was great. So, getting back into what we're looking at here, remember our previous slide actually said that if it drops below the mean, that we should be looking to be a buyer. And I agree, but there's going to be a threshold level that we should look to be a buyer, and it should be at the extremes because if you recognize anything, at least in terms of a short-term fashion, once we find acceptance, meaning once the stock gets underneath and starts to reject, the likely outcome is that it's going to work towards the bottom of the channel. So if I ask you, if you know that it's going to move down, do we want to buy here, here, or here? So let me label them out. I know that people are trying to type in the word Thor, but number one, number two, or number three, what do you think would be the best opportunity in terms of success if we want to be a buyer in the bear zone? Number one or number two or number three, folks? I love Thor. What a good looking pup. Number three, it makes sense, right? So if we're in the bear zone and we want to take a contrarian play, why don't we want to buy what's known as value, right? Buy the lowest, right? That way we're in a situation where our risk is low, but our reward is high. So if we were looking at this indicator and we're like, oh my gosh, look at all this thing that's going on with Trump and blah, 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 but we're here. Why don't I take a shot and see if I could get any kind of upside in Tesla? Because if I do, it'll probably make my month. Well, from this level at 273, the stock within 2 days was trading near $320. And that is the power of the LRC. In this indicator, if you could understand the structure, could be something that could be immediately applied, whether you're proficient with technical analysis or not. It's pretty simple. Understand your extremes as your pivot points. This white line could be your short-term ceiling or floor. Crossing above is bullish. Crossing below is bearish. And if I told you these things and you start seeing them and then you could trade on them, guess what? trading gets a lot easier because we know where it could go in the direction it's trying to go. It gets us on the correct side of the markets more. It also allow us to capitalize on our trades. How many people ended up buying here? And I know a few that bought here and closed here when they could have closed here. Yeah, I'm glad you made 17 points, but I'm sure you would have liked to make 40 or 50. And that's the difference. If you want to turn your 13-point winner into a 30-point winner, well, this is how. All right. So again, final call for the word of the day. It is the great and extremely handsome Thor, looking just like Papa. Much love, Paul. Hi, Charlie. What period do you mainly use? The 100 period. No, I use 100 period across the board. So there's a linear regression 50, there's a linear regression 100. I highly recommend the linear regression 100. I think there was another question that I may have missed. Oh, that was the question. I apologize. Thor. Now, folks, we do have like 2 or 3 minutes. So if you quickly want to get a question out for me, I would love, and I repeat, I would absolutely love to be able to answer anything and everything. But if not, we're going to work our way towards the word of the day. This picture cracks me up. When I got this PowerPoint and I was going through this, and the great Scott Bauer created this for me, and I saw the word of the day, I knew this was going to be a smash. Now I'm going to say 100%, okay, that the linear regression channel won't always work perfectly. But if you could utilize this linear regression channel, I don't know what your favorite names are: Meta, Tesla. Whoops. So let's go to Meta. Let's see how Meta is traded here. Yeah, so Meta is starting to get trapped underneath. If you notice, Meta's been a little weak. They were strong here, holding support, now getting trapped. And again, if just heed my comments. We lose 685 in Meta. It wouldn't surprise me if we start seeing it work towards 680. So, most importantly, why don't we look at the markets? SPY. Well, guess what, folks? SPY is still remaining in the upper zone. QQQ. Let's see here. Still remaining in the upper zone. CRWV, ladies and gentlemen, the most recent and crazy pumper, is now remaining below. And these will give you a lot of structure, a lot of texture, more importantly, the proper direction. So, Sirius says, last year when you first taught us linear regression, I added it as a filter to all my algos. It is a phenomenal tool. I like this in a Bollinger Band. Yep. 100 million, 1,000%. I can't tell you how effective it is. Again, proof is in the pudding. Any stock that you want to talk about, we could pull up. Oh, let's talk about Boeing today, right? Very quickly before we get to the word of the day. Boeing, I actually talked about a reversal early in the morning. Shocker that it got very weak when it broke underneath. Rightfully so, when another damn plane crashed. But look at where the pivot point was, ladies and gentlemen. On the daily chart, you're like, oh, there's no level for the stock to pivot. I disagree. There was a perfect level to pivot, and so far they are $8 off those lows. Now, I don't know if they're going to be able to maintain that, but yet, ladies and gentlemen, that is something you are going to be attentive to. Now, everybody, let's bring up the word of the day. Good luck, everybody. The word or the name on the wheel is D. Stanley the third. I like the third. D. Stanley, do me a favor. Please reach out to. I think there you go. Please reach out to our mod. I think it's Prosper Swag at prospertrading.com. You are today's winner. We'll send you something out. I'm not sure what it is. I just work here, guys. And with that, I want to say, ladies and gentlemen, Thor's a very handsome pup. So is the Lake Show. And today, hopefully, this indicator lesson will help you. It's been a great 30 minutes. I'm grateful. Please, again, click that notification button, subscribe to the channel, and hopefully we will see you soon. I'm out of here. Peace and love, everybody. Go Bulls!